Looking ahead to the week beginning September 23rd, the major event of the week is the United Nations General Assembly, or the UNGA, which could be a pivotal moment for Brexit. But as far as wider markets, we think the week will most likely be framed as an aftermath of the unusual price moves in oil and the repo markets last week. That said, we will still run down the key economic data and releases for the week. As far as the general markets backdrop, oil has seen the biggest changes, with its biggest intraday swing since Brent crude oil futures first began trading, thanks to that drone strike in Saudi Arabia. Short-term money markets were out of whack, with a big spike in repo rates thanks to a shortfall in funding. Stock markets haven't been perturbed though by those gyrations in oil and repos, with US indices sitting close to record highs. The dollar is little changed after the Fed's well-telegraphed rate cut last week, and the British pound has been drifting higher with the rising chances of a renegotiated Brexit deal. The UN meeting runs from Tuesday the 24th through to Monday the 30th. As far as data goes, PMIs for Germany are expected to show the country hovering above contraction in its composite reading, with IFO business confidence data also expected to decline slightly. We already know Germany's in a slump, so a slide in the data could actually eventually be a good thing for the euro, because it would actually bring forward the fiscal easing that Germany have so far reluctantly been talking about. The RBNZ is expected to stay on hold at its meeting this week, but November looks likely for another cut. But given this week's weak GDP reading, a surprise cut this week is not impossible by any stretch. We also have US GDP, which is expected to hold at a respectable 2% year over year. With regards to this UN meeting, UK Prime Minister Boris Johnson is scheduled to meet European Commission President Donald Tusk as well as Angela Merkel at this UNGA meeting. The end of September has been framed by a few European politicians as an unofficial deadline for when the UK must present some sort of concrete alternative to the Irish backstop, which, as we know, is what Boris Johnson is trying to have removed from Theresa May's deal to then take it back to Parliament. Our thinking is that once Boris has left the UN, the UK will submit its proposals in a more concrete written form, and we'll know sometime after then how close we are to a Brexit deal, another delay, or perhaps no deal. It's hard to see how the whole Brexit thing plays out, of course, given the amount of variables involved, but short-term good feelings about a deal should be positive for the British pound. At the time of filming, oil's holding on to $63 Brent crude oil, that is, as support after last week's spike over 70 and subsequent collapse. While trade relations are better, traders are likely to be paying especially close attention to what happens next with these Middle Eastern geopolitics. Trump looks set to double down on sanctions on Iran, so as much as you can believe that's even possible given how strict the sanctions are now, it should be a positive for oil prices because of the extra curb on Iranian exports. The bigger gains, of course, would be if Trump doesn't go down the route of further sanctions and actually favoured some sort of military intervention. But even if the US doesn't side with Saudi Arabia in some sort of retribution against Iran, who they are accusing of these drone strikes in Saudi Arabia, the geopolitical tensions are going to remain higher for a while, and that should mean that oil needs to be priced higher just to reflect that higher risk potential from these regional politics. Right, that's it for this week. Thank you very much for watching, and if you do enjoy these videos, please make sure to follow myself and LCG on YouTube and social media.